Hello, everyone, and welcome to today's webinar. It's PPP Loans, the latest on forgiveness and QuickBooks tracking. My name is Jeremy Smith. I'm Grant Station's Communications and Technology Director, and I'll be assisting our presenter for today, and that's Gregg Bossen. Now, before we begin, though, I want to tell you a little bit about today's presenter. Now, Gregg is a practicing CPA with a full-service accounting firm located in Atlanta, Georgia. His firm specializes in tax and accounting for nonprofits and small businesses. Most of his clients are nonprofits and small business owners who use QuickBooks. Gregg has been teaching QuickBooks seminars around the country, although not lately, for various groups, both new users and other CPAs, and is considered an expert in the program. Gregg's taught for Intuit, the makers of QuickBooks, and he's also taught CPAs around the country the new features and updated versions of the software. And today it's all about PPP with Gregg Bossen.
All right, thank you so much. And to those of you that are used to hearing music at the beginning of the webinars, I screwed up my computer somehow, so I wasn't able to get the music to play right. I think we'll have music at the break. And hello, Susan. Susan was in a webinar that I took, that I taught the other day. So for those of you that haven't seen me teach before, I'm a CPA, I'm an accountant, just like the one that does your audit, your taxes, all that kind of stuff. I specialize in nonprofit organizations, and then I also own a company called QuickBooks Made Easy for nonprofits. And all we do is teach people how to use QuickBooks, all right? And we do that in a number of ways. We have streamable training products, on-demand products that a lot of people have. We also have technical support where you can call and ask us questions. And then we have live seminars and webinars across the country. This is one of them. Now, this is one of our free webinars. And I want to go back up here. Bill is our marketing, and he's head of the kind of client engagement, community engagement. Barbara and Paige, they're both accountants in their own right. They both have their own firms, but they also work with QuickBooks Made Easy because they both specialize in nonprofits. So when you do get a tech support agreement with us, you'll be speaking to either myself, Barbara, or Paige, and then there's a couple of others, but mainly it's the three of us, all right? So let's see. We already went through that. Okay, so this is an upcoming webinar, which I'll mention it at the end. And I think I just want to get right to the agenda. And before I do that, I think, actually, no, I'll do that in a second. All right, so this is what we're going to cover, all right? So, and by the way, we can see the stuff in the chat. So please, in the chat, let me know that you can see the screen. You should be seeing latest changes to forgivable rules. So somebody put in the chat, yeah, Greg, I can see that. Okay, cool. All right. So this is what we're going to be talking about today. We're going to be talking about the latest changes to the forgivable rules around PPP. And then after that, we are going to be getting into the rules in detail. We're going to look at documentation, what you need to prove. So this is all about getting forgiveness for PPP. Then we're going to talk about the HEROES Act, because I really wanted to give you like the latest of what might change when it comes to PPP. And the HEROES Act is something that Congress passed. The Democrats in Congress passed it a few weeks ago. It's $3 billion, I think. And let me just tell you something. It's not going to pass, okay? It's dead on arrival. Trump would never sign it because it was given by a Democrat, so that's not even going to happen. But yesterday, the Senate, together with the Trump administration, came out with a $1 billion, it might be trillion, it's probably billion, plan. And there's some changes there, and we'll cover that at the end of the webinar. And then finally, we're going to do QuickBooks tracking. Now, one thing about this webinar, which I've been teaching this webinar, and I change it every time I teach it because there's always new information, but I never have time to really get into the details about the QuickBooks tracking. And so Susan, so everybody in the chat, you can say thank you to Susan, because what I'm going to do for all of you, and we have like, what do we have, 200 people in the webinar now, but because of one person, because of Susan, we are going to be covering this first, okay? That way we make sure we talk about how to track it in QuickBooks, and then we'll do the other stuff later on. So you guys put in the chat and let me know if that's good about that. If y'all are excited and that's what you wanted. Okay, cool. Because I know some people are like, you know, even though it's a free webinar, you still want what you want, you know? So anyway, so we're going to start with that. So having said that, I'm getting ready to start in a second. Couple things. One, we've got the chat. That's one place where you can ask a question. If it's a really short question, one sentence or something like that, where I can read it pretty easily while I'm in the middle of talking, then put it in the chat and I'll answer it on the fly, okay? Whereas if it's a long question, 2 or 3 sentences or something like that, you got a long story you got to tell, then probably you want to put it in the Q&A, and that's something that Paige and Barb will address. And then I'm probably going to have both of them come on at certain points and talk to us about what's going on in the Q&A. The other thing is in the chat, you can put to all panelists, or you can put to all panelists and attendees. So just depends upon whether you want to share your question with others. And before I answer questions, I'll read the questions if I need to on the fly. So Lise already wants to know if it's cool to track PPP money in classes. Absolutely not, okay? Classes you'd want to use to track program, admin, and fundraising, because that's how nonprofits have to report their expenses. So let's just dive right into QuickBooks tracking real quick. But I do want to do a little poll here. I'm just kind of curious to see. I'm going to launch the poll here. And I want everybody to answer. We've got a little over 200 people in the webinar. Did you or your organization get a PPP loan? So let's see who did and who didn't. I want everybody to answer. And you know, the reason why I wanted to know this is because originally it was going to be really hard to get a PPP loan, but it's gotten progressively easier as they figured out what to do. And you have until August the 6th, I believe, might be the 8th, I think it's the 6th, to apply for a PPP loan. So I'm going to end the poll and show it here. So if you have not yet gotten a PPP loan, what are you doing? Okay, I want you to go to the website Get Divvy. I'm going to pop it up on the screen here for those of you that have not gotten one yet. But if you go to getdivvy.com, and they're not giving me any money, okay? This happened to be a really easy way to get a PPP loan. Go to resources and go to COVID relief. And then you will be able, I think if you scroll down here, where is it? Maybe I already passed. Here, apply now. You click apply now, and then you'll be able to apply for a loan. Now, you want to click on the bottom that you're not a Divvy customer yet. You don't have to become a customer, but if you click on that, walk through the screens, there you go. It'll be pretty easy. Somebody wants to know what the website is again, and it's already up on the screen right here. It's getdivvy.com. Getdivvy.com. I'll even make it bigger. 5, 4, 3, 2, 1. Okay, cool. So there we go. Enough about that. All right, so let's get back into QuickBooks and talk. Actually, I got to get back into my poll first. All right, cool. So tracking in QuickBooks. So first of all, why do you want to track it in QuickBooks? Well, the reason why, primarily, you would think it's so you can understand how you're using the money, okay? And this might help you get ready to ask for forgiveness. But to be honest with you, it's not like you could print out some QuickBooks report and give it to the bank and they'll be like, oh, that's proof you spent the money. That's not going to really be that helpful. So really, this is the main reason, this third reason why you want to track your PPP loan in QuickBooks is to ensure you don't mess up your grants, okay? See, if you have a grant that will pay for payroll for May, June, and July, and now you have PPP paying for that payroll, well, you can't count the same money for the grant and for PPP. That's double dipping. And so what you instead want to do is call the grant agency and say, listen, during this time, would it be cool if I use your money for other things because PPP is paying for it? So So again, if you have a grant that pays for payroll, now you got PPP paying for it. You can't use the same dollar for both grants. And so therefore, that's why you kind of want to track it, okay? So we want to basically point expenses to a PPP loan, because a PPP loan is basically like a federal grant once it gets forgiven, okay? So, and here, this is me telling you, hey, call your funders to renegotiate. And I think a lot of you have already been doing that. Leslie says we were told that it would be up to the funder on whether or not grant funds would need to be backed out. They said it was determined that the source of the dollar didn't matter. Depends upon the grantor, basically. Yes, Roger, the PPP loan is very different from EIDL. EIDL is Economic Injury Disaster Loan. This loan came straight from the SBA. If you got the advance, it was $1,000 an employee. If you do get that advance and then you get a PPP loan, you will have to pay that advance back. However, if you didn't get the PPP loan, then you get to keep the advance. And then, of course, if you got a real loan from them, you always have to pay that back, okay? So let's see. So how do we track this in QuickBooks, okay? Well, when you get the funds, what you're gonna do, and I'm just telling you this and then I'm gonna show you, you're gonna create an account in QuickBooks called a PPP account, PPP loan account. It's an other current liability. Doesn't matter if you got the PPP first, it's the same rule, Donna, and then EIDL later. That's what happened with me. So then when the money comes in from PPP, you're going to deposit it not to an income account, because it's not income yet, you're going to deposit to the other current liability account. Then you're also going to create in your customer list, and if you're in the online edition in QuickBooks, it might be called the donor list or the client list, but whatever. You're going to create a new name called PPP loan and maybe the name of the bank, and then you're going to point costs to that customer when you're entering transactions, okay? Then you'll be able to get a report showing you how you spent the dollars. And then when you're done spending the money and you get loan forgiveness, then you're going to do a journal entry to move the income off of the balance sheet onto the P&L so it'll show on that same report. So let's go ahead and show you how to do that. So I'm going to do it in the desktop first, and then I'll do it in the online edition for those of you that have the online edition. So the first step in the process is to go to your customer list. So I'm going to go to the customer list, and you would do this before you ever even got the money. And you go to the top left and you click New, and then you type in the name of the customer, which would be, I would call it PPP loan. I think I already created one here. There it is, PPP loan Wells. And all I really did was put the name of it, and that's it, okay? All right, so that's the first thing that you do, okay? The second thing that you do is you enter the fact that you got the money. So when you enter the fact that you got the money, you're just going to go, oh, there's a second thing you have to do, I forgot. You have to go to the chart of accounts list and also create another current liability account for that loan. And I've already created one called PPP Loan Wells, okay? So I've created an account, that's a liability account, and I've created a customer. I've created two things in QuickBooks, okay? Then when the money comes in, you're simply going to, let me edit this transaction. If you're in the desktop, you're going to enter in the make deposit window. You're going to enter the money. This is who you received it from, this customer you created. You point it to that liability account because it's not income yet. This is an e-check. Remember, classes are to track between program, admin, and fundraising. That's why we're going to use the customer, because class is already taken up. And then over here in amount, we put the amount we got, $10,000, okay? So then as you enter expenses, I'm going to go to banking and I'm going to click write a check. You'll see as you enter a transaction, and I'll just go to an old one here that I probably already entered. There we go. So here's a check that I entered. You always point checks to an expense account. Same thing with bills, same thing with credit card charges. You always point them to the expense account, which the natural category is what your expense account should be. And then the other side, well, then additionally, you will point it to the PPP loan. Okay, that's the customer. And then finally, you'll say whether this expense was for program admin or fundraising. So when you're entering your expenses, and this is how we teach it in my big trainings, you always point expenses to three things. You point it to an account, you point it to a program admin or fundraising, and then if it's paid for out of a grant, and that's kind of what this is, you point it to the grant using the customer job field. Okay, so you do this on checks, you do this on credit card charges, you do this on really any transaction window in QuickBooks. Here's a bill. When you enter a bill, you can do it in the same place. Here's where you can put the PPP loan right here. Okay, so then you'll be able to get a report. So I'm going to go ahead and show you a report. I'm going to go to reports. I'm going to go to company and financial. I'm going to go to profit and loss. I'm going to click the A to make this all dates, and then I'm going to customize. Now, what I'm going to do, and I have, by the way, a whole seminar coming up next month, a webinar where we're going to spend the first day on preferences, but the second day we're going to spend on reporting. We're going to learn all about customizing your reports in QuickBooks. But I'm going to go to filters, and filters works the opposite from the way that you would think. You don't filter in what you don't filter out what you don't want, you filter in what you want to keep. So I want just transactions that were pointed to the PPP name. So I'm going to click name, and this is all my names. I'm going to go down to where the PPP loan is, and where is it? It's up in customers. I don't know why I can't see it. I'm blind. I'm just going to start typing PPP and it'll pop up. There it is. PPP loan wells. There we go. So now when I click OK, it's going to flush all these transactions out of this report except for the ones that were pointed to the PPP loan. And you can see if I click on this gas one right here, I'll double click on it. It's a check right here. Here's a check. I pointed to the PPP, and because I did that, that's why it appears. So I'm going to look at my balance sheet right now, and I want you to see that the revenue is down here. It's a liability to you until it's forgiven. Once it's forgiven, then you can take it off the balance sheet and make it in to income. So I'm going to do that by using a journal entry. So 877261 is what we spent. In this example, we didn't spend all of it. And so I'm going to, let's see where my memorized 877261. So here's my journal entry. 877261. 877261. So basically what I'm doing is I'm lowering the liability and I'm increasing my income. Does that make sense? So I'm going to go ahead and click Save and Close. And oh, it's important that you put the name of the customer in here because that's the only way it's going to show on that P&L. So I'm going to go ahead and click Save and Close. I forgot to put it to a class. I should have, but that's not what I'm teaching. And now, here we go. And now I'll go back to the balance sheet, and you'll see that on the balance sheet, all that's left is the amount that we're probably going to have to pay back because we didn't spend it. But if you're doing this right, you won't have to worry about paying anything back. Now, for those of you that are in the online edition, before you start freaking out on me, let's just go to the online edition here and show you that everything is basically the same. You go to sales, you go to customers, and I'll just push PPP, and you'll see I've created a customer for the PPP loan. I turned it into a project. That's not something that you necessarily have to do. But the point is that when I enter expenses, let's just go to, most people that are in the online edition, they download their transactions. So when I'm in the downloads and I click it, you see here under customer, I can put my PPP loan right here, my PPP loan customer, okay? How did you link the payroll to PPP Loan Well's customer's name? Well, it depends upon how you enter payroll. If you enter payroll using a journal entry, then when you click this and you click journal entry, a journal entry screen will pop up and you can put the PPP here. If you are using desktop and you're using the payroll through QuickBooks Desktop, when you go to pay employees, let me see if I have it open in this data file. Yeah. When you click pay employees and we open a paycheck detail, you can break the salary up. See, you can point it right there. All right. So that's basically, I think that answers your question there. All right. But anyway, and then you can get the same report that you can get in the desktop. We go to reports. We go to the P&L. And then I'll just make it this this year. Where is this year? This calendar year, and I'll run it. And then I'm going to customize just like I did in the desktop, except the customize button's over here on the right instead of being on the left, which is how it is in the desktop. So I'm going to go to filters, and then I'm going to filter by customer. It's interesting. It just says name in the desktop. In the online edition, it says customer, and I click it, and now I can pick the customer, and I don't want to have to go searching for it, so I'll just click PPP, check it, run report, and now it gives me any expenses that were pointed to it. Obviously, I didn't have any expenses pointed to it, but you get the idea. All right, so I think I'm going to be done with this unless anybody has any questions. Susan, did you have a question for me? I just wanted to make sure that nobody feels left out. Is everybody cool? I want to make sure that everybody doesn't have any more questions about tracking in QuickBooks. Okay, Susan's good. Okay, cool. All right.
Hey, Greg.
Let's see. Yes.
This is Barbara. Really quick. We had one question on in QuickBooks Online. How do you point payroll to the customer or PPP loan if you're not doing it via journal entry because they're using QuickBooks Online Payroll?
Yeah. So do you want to?
Beyond the scope of this?
It's not beyond the scope of this. It sucks, is what it is. So I'm going to let you in on a little secret. A lot of us accountants are not huge fans of QuickBooks Online Payroll. And one of the reasons is it doesn't do job costing. So in other words, when you enter a paycheck, you can't really split it between different customer jobs. So I end up having to do journal entries like this. I'm going to do a journal entry. So presumably you would point salaries and wages to no name at all. Or maybe, yeah, you wouldn't even put it to a name. And then you would lower it by the amount that you wanted to go to the PPP, salaries and wages, and then you would increase it for the PPP. So we're not really changing salaries and wages at all. We're simply moving salaries from not being pointed to the grant to being pointed to the grant, okay? Thank you, Barbara, I appreciate that. All right, unless there's anything else, we're gonna move on because we got a lot to cover about PPP. So let me get back to my little slides here. All right, cool. So now I believe in taking breaks because I don't want to wear you all out. So we're gonna go about 20, 25 minutes, and then we're gonna take a break. Okay, is everybody cool with that? Tell me you're cool. Let's see, Katrina, can T-sheets be added to provide job costing? T-sheets will do job costing. Once again, it will not show on a P&L by customer. So it ignores it when it comes to actually entering the transactions, and it sucks. So anyway, yeah, it's definitely a bummer. Hopefully at some point we will start that over again. Yeah, the steps were on the slide, Jeremy. The steps were on the slides. They were right here. These are the steps right here. But anyway, all right, so now let's talk about the PPP loan, shall we? So here's the latest changes for you. So this little first section is just going to be kind of the latest changes. All right, big deal. In fact, let me do this again. There's a big deal that you need to know about, okay? Before we even get into this. Right now, as we speak, there is pending legislation that has already been put out by the Senate. It's not the thing between Trump and the Senate on the coronavirus help or whatever. It's not that. This is actually already has a name. It's called the PPP Small Business Forgiveness Act, okay? It's a bipartisan bill. Everybody supports it, the Republicans and the Democrats. Small businesses support it as well as banks, okay? Now here's what this thing says if this passes. It's a pretty simple act. It says that anybody who gets a PPP loan of $150,000 or less doesn't have to try and prove anything in order to get forgiveness. All they got to do is sign a one-page letter saying that they took care of the rules, and that we were in line with the rules, which of course the rules are a mess. And so it's like, well, as the best as I can tell, I did it. So let's see. Yeah, this is really exciting, and I do hope that this passes. So you may not have to worry too much about the rules, except you really are supposed to be, you know, making sure that you comply with the rules, which we'll go over next. But anyway, so any ideas to when we will know? No, I mean, I imagine in a few more weeks when it gets closer to when people are actually trying to apply for forgiveness. I wouldn't be surprised if it happens later on in the year, more towards fall. If that passes, do you still have to pay back the EIDL advance? I think so, Christine. The way it works is, let's say you got a $4,000 EIDL, and then you got a $60,000 PPP loan. So the EIDL advance, you have it, you never speak to the SBA again about it. You're talking to your bank about the PPP. They forgive the whole $60,000. When they send it to the SBA to get real approval, the SBA will approve $56,000 because the SBA knows they gave you that EIDL, so they'll reduce it. Does that make sense? All right, enough of that. All right, so interest accruing since disbursement on PPP. No, as long as you get forgiveness, you'll be forgiven all the interest accruing as well, Mary Ellen. Don't have to worry about that, okay? All right, so I want everybody to just stop for a second, and I want you to pay real close attention because I'm going to go through these rules fairly quickly, and I don't want you to miss anything. And these are the 4 factors that you need to be in compliance with in order to get forgiveness, okay? So I want you to just hang with me. You ready? Here we go. Okay, so here's what you have to do to get forgiveness. You have to spend it in, now originally it was spend it in an 8-week period. You spend it on certain things, payroll, other stuff. You have to maintain your compensation levels, can't drop people's pay too much, and you have to keep your levels maintained for employees. You can't fire a bunch of people. Now, they changed the rules a few weeks ago where now it could be either 8 weeks or 24 weeks that you use the money. And instead of 75 and 25, it's now 60 and 40. So those are the 4 rules, okay? And we're going to get into them in detail, okay? I don't even need to show you this. I'm not going to worry about that. Okay, so first thing I want you to pay attention to is this 8 weeks or 24 weeks, because not everybody has the choice between the two. Here's the deal. If you got your loan on June 5th or after, in other words, the money was dumped in your account on June 5th or after, then you have 24 weeks from which to spend the money, okay? Now, it can't be any later than December 31st of 2020, okay? In other words, you have to have all the money spent by end year in order to get forgiveness for everything, okay? So that means if you got the money between June 5th and June 30, you have a full 24 weeks. If you got the money July 1 or after, you have until the end of the year, even though it's less than 24 weeks, okay? Now, most of us got our money before June 5th. If you got the money before June 5th, then you have a choice. You could either spend it in 8 weeks and ask for forgiveness, or spend it in 24 weeks and ask for forgiveness. So then the question becomes, which one should you choose, okay? So most people are like, well, obviously 24 weeks is better because I've got more time to spend the money, okay? They're giving me, you know, when you got your loan, it was basically 10 weeks of pay. It's 2.5 months of pay. And now they're giving us 24, what is that, 6 months to spend it. I mean, surely we'll be able to get forgiveness by spending it all on payroll. But anyway, I did want to point out there are a few advantages of going, you know what, I'm going to do 8 weeks instead. First of all, it gets it over with, so you don't have to worry about it. Second of all, and this is probably the bigger plan, if you're planning on borrowing money from someone, like another bank, some other loan, you probably want to get this loan off the books. Remember, once you get forgiveness, you can move it into income and it's no longer on your balance sheet as a loan, okay? So that's a reason why you might want to do it in after 8 weeks. Now, of course, you'll only want to do it if you kept your staff, if your staff is full up, you know, you're not dipping because you got to keep your pay up, you got to keep the number of staff up. And so if you have it up at the end of 8 weeks, then go ahead and apply, because at the end of 24 weeks, when you apply later, that may not be the case anymore. You may have had to let other people go. So that's why you want to do it maybe after 8 weeks. Now, obviously, 24 weeks is better because it gives you more time to spend the money. So my advice is if you can get full forgiveness, which means you've spent it all, you spent it on the right things, and your staff levels are back up where they were, at least on the date that you asked for the money to be forgiven, and your pay is back up, then you're good, okay? So now, when does this time period start? The day you get the money. As soon as you get the money, that's when the clock starts ticking in terms of getting loan forgiveness, okay? Enough of that. When can you file to get forgiveness? Whenever the bank says you can, okay? There is an SBA forgiveness form. Does anybody know the number of that form? Put it in the chat if you know what the number of the form is. Where are our geeks that know the number of the SBA forgiveness form? There you are, Susan. 3508. That's right. It's a form 3508. And there is a 3508 EZ. And I suffered through the calculating of this form. It's kind of a mess, but it doesn't really matter because most banks aren't accepting this form because they have their own form, all right, which is probably going to mirror the form 3508. But they're right now trying to figure out about getting this form for themselves. So you're just going to have to wait to file. I don't know that there's very many banks in the country. I know Wells Fargo isn't accepting the 3508 at all. They have their own form, which is not out yet. Chase says they're accepting the form, but they're not accepting anything right now. So there's nothing to even, they won't take it if you give it to them, okay? So it's kind of crazy. So you're just going to have to wait. How long do you have to file? Now I got a little test here on this one. So let's see how long. Katrina, we'll get to you, Katrina. Watch the screen and you'll get your question answered, Katrina. Okay, so first of all, this one, you must file for forgiveness. You have to ask for forgiveness no later than 10 months after the last day of the forgiveness period. So I have a question for you. You can put the answer in the chat. What is the last day that anyone in the world will be filing for forgiveness? What's the last day that anyone in the world will be filing for forgiveness? Put the answer in the chat. Oh, I love you people. That's right. That's right. The last day for spending the money is December 31. 10 months from that is October 31, 2021. You are a god. Now, here's your question, Katrina. Can you file early? Yes, you can, provided that the bank will let you, okay? You can file before your 24-week period is up. Should you file early? Only if you've spent all the money, your staff levels are back up, and your staff pay is back up. Now, we're going to talk about levels in pay in a few, but I just want you to understand right now, I'm going to look in the screen. I'm going to get real close to the screen so that you understand this. You don't have to have levels and pay up the entire time that you're in the forgiveness period. It's only at the end of the period. You could literally raise people's pay, hire people for that last pay period apply for forgiveness, get it, and then get rid of everybody again and not be penalized. Isn't that crazy? But that's the way it is, okay? So do y'all understand that? I need you to understand that. We're going to talk more about it, okay? But anyway, let's see. Let's get moving. All right, so here is the rules in detail, okay? I'm going to go back to the 4 factors. So I've given you kind of like the time period and the changes and stuff. Now I'm going to give you these 4 factors, which we already said what they were, but I'm going to kind of get into the details a little bit. First, you have to spend it in either an 8-week period or a 24-week period. Then you got to spend it on eligible costs, which is payroll, 60%, and then other stuff like mortgage interest, rent, utilities. We'll talk about what that means too. But then the other last 2 things, which we'll do after a break, we're going to go a little more and then we'll take a break, are our compensation levels and our employee levels. Okay, we got to keep those maintained. So anyway, let's start with just these first 2. When you spend it and on what kind of costs. Now I'm going to talk about payroll first, and then I'm going to talk about other costs. Okay, so first thing we're going to talk about is payroll costs, and I'm going to talk about your time period that you have to spend it in. Okay, all right, so here's the deal. Payroll, it used to be that it had to be paid and incurred during your forgiveness period. Okay, that is now gone, and the real answer is when it comes to your payroll, it just has to be paid during the forgiveness period. Okay, so right after you get your money, the next pay date, that gets included. Okay, even if it's paying for things from before the you got your money. Okay, so even if it's for a prior period, when the pay got earned doesn't matter. It's the pay date. And if it occurs during your forgiveness period, it counts towards forgiveness. Okay, so this means you can include the entire first payroll. Okay, so just to give you an example, you got the money on June 15th. Your next pay date is the 17th. It's for the first 2 weeks of the month. How much can be included for forgiveness? Somebody tell me, how much is included for forgiveness? Put me in the chat. Somebody put in the chat, how much is all of it? Thank you, Tom. That's right, absolutely all of it. Absolutely all of it, okay? All right. What about the last payroll of the forgiveness period, okay? It won't be paid until after the forgiveness period ends. I'm telling you, it has to be paid during the forgiveness period in order to count. I mean, that would be weird. The forgiveness period, let's use an example. Say your period ends on 10/16. The next pay date is 10/23. For 10/2 through 10/16. So all that stuff earned during the forgiveness period isn't paid till afterwards. In order to get it forgiven, do I have to pay them on the 16th through the 16th? That would be crazy. You'd be calling, doing a special payroll and everything. It'd be weird. And believe me, the payroll companies were all excited about offering this because they get extra money. But this would be weird. And so they said, no, screw it. The last payroll of your forgiveness period can be included even though it's paid after the period is over. As long as it's paid with the next payroll. You can't wait 3 years to pay it. Okay? Enough of that. So now there's one more thing, a couple more things. One is, when does the payroll start? So let me just say what the rule is. If your pay period is less often than biweekly, so in other words, you either pay semi-monthly, which is on the 15th and the 30th, or you pay monthly just at the end of the month or whatever, or something else. If it's less often than every other week, then just like your entire loan, you start counting payroll from the day you receive the money, okay? And then your next payroll date, that's what starts. It's called the payroll covered period. Now, if your pay period is a lot, if it happens more often, in other words, it's bi-weekly or more, happens weekly, daily, whatever, then you have a choice, okay? You can either start it the day you get the money, just like all your other expenses, or they have this weird thing called the alternative covered period, which means that you actually can start your payroll not with the next paycheck, but with the one after that. Basically, it starts the next pay period after you got the money, okay? And originally they were trying to do this so then your pay would be all in, it would all be incurred during the forgiveness period, but now it doesn't matter. As long as it's paid, it doesn't matter. And so I don't think anybody's going to be choosing the alternative covered period. Can't do it anyway unless you're biweekly or more, okay? So it's really not that important. But anyway, okay, let's keep moving. What else do we got here? Eligible payroll costs. Now, first of all, you got to spend 60% on payroll, okay, of your loan. Does this mean I have to spend 60% to get any forgiven at all? No, no. If you spend 50%, you'll just get a little bit, you'll get less of forgiveness, okay? You won't get 100% forgiveness. So you'll get a reduced amount forgiven if you spend less than 60. Can I spend more on payroll? Now that we can do it for 24 weeks, a lot of people can just run out all the money with payroll and not even worry about rent and utilities and stuff. Of course you can spend it all on payroll. That was the goal anyway, okay? All right. So what do they mean by payroll costs? There's two components of it. There is cash compensation and there's other payroll costs. So we'll do cash compensation first. Cash compensation means, I know it says cash compensation, but it doesn't mean you have to pay them in cash. It's basically, you know, their wages, their salary, their tips, their commissions, their paid leave, and a housing allowance. Yes, if you are a house of worship, okay? All right. But what about extra pay, bonus pay, hazard pay? All that matters is when you pay it. What you call it is irrelevant. Again, if it's paid during the period, it counts. All right? Period. So here's a poll, which isn't really a poll, so you'll just have to answer in the chat. Which is a payroll cost eligible for forgiveness? Overtime pay, back pay, bonus pay, hazard pay, commission pay, or all of them? What's the answer? What is includable for forgiveness? That's right, every single bit of them. That's right, okay? All of them. All right, so that's cash compensation. Now, there's one more thing about cash compensation. All right, does anybody have someone that makes more than $100,000? Go ahead and put it in the chat. You can just say yes. Does anybody have anybody that makes more than $100,000? Yeah, we got a number of you people, all right? Elise says, absolutely not. Anyway, so the government basically says, look, if this person's making more than $100,000, we're not going to help you pay them any more than $100,000. So when you're applying for forgiveness and you have to do this calculation by employee, how much you paid each employee, you have to act like that employee only made $100,000 even though they made more, okay? So just to kind of give you an example of what this means, okay? So say you're going to try and spend it in 8 weeks, okay? Well, someone makes more than 100K. The amount forgiven is capped at, you take 100K, divide it by 52 weeks, that's $1,923 a week. So that's the maximum amount that they'll forgive. You multiply by 8 weeks, you get $15,385. That's the maximum amount that they'll forgive for that person. If it's 24 weeks, then you multiply it by 24, the max is $46,154. All right, so that's the dealio with that, okay? So other costs, let me see how we're doing here. Are contributions to retirement funds considered payroll? Okay, Carol, perfect timing. And Donald too. What about taxes, payroll service fees? So far, I've only covered cash compensation. What about other payroll costs? So here we go with the other payroll costs. Employer paid, health insurance, retirement, and state tax. Do you see anything else on there? Do you see payroll service fees on there? No, okay? It's employer paid, health insurance, retirement, and state tax. Yes, health insurance includes dental. Yes, health insurance includes vision. Okay. Yes, health insurance includes, what's the other one? Isn't there another one you usually get? I don't know. All right. So, but it's only employer paid. Okay. All right. Example. Here's a person's pay stub. Okay. The employer paid nothing towards health insurance or retirement. Everything that was paid was from the employee's check. How much is forgivable? What's eligible for forgiveness? $1,500, $2,500, $2,850. Y'all give me an answer. Put it in the chat. What do you think? That's right. That's right. 2,500. Okay, because only the gross pay, because there's no employer paid stuff here. Okay, just to understand, it's employer paid health insurance, retirement, and state tax. Okay, so now same example, except now the employer matches health insurance and also matches retirement. Now how much can be included? How much is included for forgiveness? The employer's paying part of it. Y'all put the number in there. There you go. So Judy got it right. So Tom, it's not this 150 and 200. It's not this, because this is already included in the 2,500. So basically it's the gross pay, which is 2,500, plus 200 the employer matched, another 200 that was in retirement. So the total is 2,900. Now, Patty, why not FICA? It's such a good question. The employer's share of FICA, why is it not included? It's an answer for God, okay? I don't know. All I know is that it doesn't get included. All that gets included, I'll do it one more time, health insurance, retirement, and state tax. Now, when I say state tax, I mean employer paid state tax. Not the state tax that was deducted from the check. That's already part of the 2,500. What is an employer state tax that's paid? Somebody chat. What's an employer state tax that's paid? State unemployment. Yeah, that's usually the big one. Yes. Phyllis said MTA. Is that a state tax paid in your state? I don't know. Yeah, maybe state disability. Exactly. If it's paid to the state. What if we self-insure for SUI? Well, then you're not really paying anything in. I don't think it counts, Susan. All right. Let's see. What else do we got? Okay, now I don't want to talk about payroll anymore. I'm going to talk about those other costs, which I really don't even think you need. Workers' comp is a no, does not get included. State unemployment, yes. I don't know what PFML stands for, but if it's a tax paid to the state that you live in, then it gets included, okay? If you're the one who pays it. If the employee pays it, you don't include it because it's already part of their gross. Paid family medical leave, yes. If it's paid to them, it gets included, period, okay? Unless the medical leave was for COVID and you're using the credit. There's a COVID credit that you can get where the government will credit you back those wages. Then you can't use it for PPP because then you'd be double dipping, okay? All right, other cost time period. This one's real easy. The other cost time period happens when the loan was received. It has to be paid during the forgiveness period. You can't prepay, but bills occurring during the forgiveness period that were paid with the next billing date, kind of like with payroll, they get included, okay? Now, what bills are we talking about, okay? So we want to know what expenses can be included for that 40%, okay? Just to be clear, and make sure I understand, the way we pay to the IRS is not included. Right, the amount you pay to the IRS is the total of the employee and the employer added together. That is not included. What about health reimbursement accounts, payments? You know, I don't have an answer to that, Barbara. I wonder if Barbara or Paige, if y'all could look up and see if you can see anything where somebody's asked that question about whether HRAs are included. Eligible costs. So here's eligible costs, non-payroll costs. Okay. Now these are only costs that were in place on 2/15 of 2020 before COVID. Okay, because they don't want you because the costs are like mortgage interest and rent. and utilities, and they don't want you going and getting a new mortgage with your PPP money. They want to help you with your existing stuff, not getting new stuff, okay? So now notice it's mortgage on real and business property, and it's also rent on real and business property. So it's not just the structure that you're in, it's really anything that you're renting or buying with a loan, okay? So it could be a storage facility, it could be a car that you have a loan payment on, it could be, and it's not the whole loan payments against, just the interest. It could be your rental of a postage machine or a postage meter, a copier, a rental of a telephone system, that kind of stuff, okay? And let me see if there's any questions on that. Copy machine, yes, yes. So according to Paige, everything that she's found says an HRA is eligible for forgiveness, okay? Good, okay? All right. Let's see. Now, utilities. Now, it's more than just your traditional electric, gas, and water. It's also telephone, internet, transportation, gas, ride share, stuff like that. I think a per diem would count. Repairing your car would not count, but the gas in it would count, okay? And again, it starts when you got the PPP, okay? All right. So can everybody hear me? Are we back? Yeah, it does not write or erase. It's all for looks, all for looks. Does workers' compensation count in employer paid expenses? No, it does not. And then I had an interesting question from Sherry. Sherry, are you still there? No, that's not the interesting question I had. It was somebody else. Here it is, Liz. Sorry, Sherry. Liz Barden. Any ideas on how to track employer paid costs in QuickBooks other than manually? When I apply employee time to a customer job, it automatically assigns the taxes to it. So if you're in the desktop program and you're using this, the reason why it's automatically applying taxes to the customer is in the preferences under payroll. This box right here is checked, job costing class and item tracking for paycheck expenses. If you uncheck that, it won't do it anymore, but it won't do it for anybody. So I think you're going to have to do the journal entry answer, okay? And then I'm sorry, now that okay, Sherry, have you heard anything about the SBA was not supposed to limit the loan amounts on the EIDL to 150,000, and if they are going to go back and make correction to the companies that qualified for more but not limited to that amount? What? Not supposed to limit the loans on the EIDL to 150. Oh, I haven't. So this is this is not PPP. This is the economic injury disaster loans, saying they weren't supposed to limit them to 150,000, so they're going to actually go to these companies and make corrections. I have not heard anything about that at all. Alexandra, do employees have to be full-time to be counted as forgiven for payment in payroll, or will it also be forgiven for part-time? Alexandra, it'll also be forgiven for part-time. And as a matter of fact, let's go ahead and get back into the webinar and talk about the last two things that we need to worry about. One of them is compensation levels maintained. So basically what this is asking us is it's basically asking us to encourage us to keep the staff at near or exactly at what they were making before COVID started, okay? Now, we're not talking about reducing people's hours or getting rid of people. That's the next topic. We're talking about just how much you pay the person, period, okay? All right. So how do you measure to make sure that you haven't dropped people's pay? You compare them. You compare the pay rate before COVID to the pay rate during your forgiveness period, okay? Now, basically, you compare your pay rate from before COVID, and for term, there's a little calculation you go through here, and this calculation is the first quarter of 2020, so you get your average pay rate for each employee. Got to do this for each employee separately, what their average pay rate was, and I'll do it in a second so you can see how it works. You compare it before COVID to during the forgiveness period. If you didn't reduce the pay more than 25%, so they'll let you reduce the pay up to 25% without any penalties, but before 25%, you may get a reduction, okay? Unless you bring the pay back up right before you apply. Like I was saying before, you can bring it right back up before you apply, then drop it back down again, and no one's going to say anything. Seems unfair, but whatever, okay? So let's show you an example here. So, I should say one more thing. What about people that are gone? You exclude people who worked in the first quarter of 2020, therefore you have some sort of calculation as to their average pay, but they're gone during the forgiveness period. If they're gone during the forgiveness period, you can ignore them, okay? Okay? Don't worry about people not employed during the covered period. They don't count for this calculation, okay? Now, they might count for the last little thing, which is keeping your employees' levels up, but for compensation, they don't count, okay? All right, so here's a little example. Jane makes $75,000 for the first quarter of 2020. During COVID, we gave her a raise. She's fine. She didn't go down, she went up. Just kind of showing you can pay people more money and have PPP pay for it. Won't be a problem, okay? What if you filled the role but someone left? Can you use the money to fill the role again? Two things. That's not what we're talking about right now. We're talking about the pay rate. We're going to be talking about the employee levels themselves in the next little topic, okay? So let's hang on that, Alexandra. But yes, you can certainly replace them and it won't be a problem, okay? Anyway, so Sam was at 40, now at 30, went down 75%. Is that a problem? Are we going to get a reduction for Sam? Yes or no? Somebody give me an answer. You going to get a reduction for Sam? Yes or no? Somebody give me an answer in the Zoom in the chat. No, you won't, because you can reduce it as much as 75%. Won't be a problem. Bill, salaried person, went from 30 to 20. That's a 0.667 reduction. That can be a problem. And for those of you that are wondering about an hourly employees, even though they're part-time, whatever, doesn't matter. Jenny's hourly. Doesn't matter how many hours she works. Her average pay was $20 an hour before COVID, $10 an hour during COVID. That's a 0.5, that's a 50% reduction, got a problem. So these two people we may have issues with, okay? However, we may be able to get rid of the issue, okay, if we bring them back up right before the end of the period, okay? So basically, you got to go through a test. I think I'm just going to skip right to the chart to give you the test. Well, actually, let me tell you what the test is first. So the test is if you had to lower pay because of COVID, and to make sure, and you raised it back up by the end of the forgiveness period, you won't have a problem. Now, here's one issue that's unresolved right now. We don't know what we're going to do about this. To make sure that you lowered pay because of COVID, they want to see what the pay was on 2/15 in 2020. And then they want to compare that to the pay during the worst of the COVID, which of course the worst of the COVID's now, but anyway, during the beginning of COVID. And if that pay dropped, that means you must have lowered it because of COVID. So then as long as you bring it up by the last day of the forgiveness period, you won't get a reduction. But here's a problem, a big problem that has not been resolved yet. Even though the intent of the law was that you bring it back up by the end of the forgiveness period, the application itself, the Form 3508, says that you have to have forgiven it. You had to bring it back up by the date you applied for forgiveness, okay? Now here's the problem. The application says you have to have your salary back up by the application date. Well, this date may be way after the forgiveness period. The bank's not accepting the applications yet, okay? So what if after the forgiveness period, you're forced to drop people because they're not giving you any more money, and then later on the bank finally lets you file, now you're supposed to get a reduction? That's not fair, okay? So what I think, this is me, this is just Gregg Bossen, that they will fix this, all right? And instead of it saying that you have to have it back up by the date of the application, they'll say the end of the forgiveness period. I think they'll fix that problem. That's me. It's a personal opinion from me, okay? All right. Let's see. What does this say? They aren't getting reduced by 0.75 or 0.667. They're getting 0.75 or yes, of their prior pay. Thank you, Karen. I said that wrong. Thank you. All right. Okay. So let's take these two people and see what happens when we do our little test to see if their pay went back up by the end of the forgiveness period. Okay. So here's Bill. He was at 30. He went down to 20. He went back up to 30. He's okay. Okay. Jen, she's a hourly employee. Doesn't matter how many hours she works for purposes of this calculation. In fact, she could have just worked 1 hour. Doesn't matter. Okay. Her average pay was $20 an hour on 215. Went down to 10 during the beginning of the COVID period. At the end of the period, it went back up to 12. Notice how we increased her, but because we didn't increase her back up to her original pay of $20, you're going to get a reduction, okay? And in case you're wondering, you can reduce somebody's pay by 25% and you'll be okay. But if you reduce them more, the only way to be okay is to bring them back up all the way to their original pay, okay? Not to the just to the 75% mark, okay? The other thing is when it comes to any employee that makes more than $100,000, this test doesn't apply. In other words, you can drop those people's salary all you want, okay? So anyway, here's what the calculation would be for the reduction. It's actually, this isn't that bad. This is a calculation you do for each employee that got reduced, okay? So we reduced her from $20 an hour to $10 an hour. We were only allowed to reduce her 25%, so we were only allowed to reduce her to $15 an hour. We reduced her $5 too much. Now, it doesn't take the $5 and multiply it by the actual number of hours she worked. It multiplies it by the average number of hours that she usually works. So basically what they do is they take her average weekly hours for the first quarter of 2020, we'll say it was 20 hours, multiplies it by 8 weeks. If you're asking for 8 weeks, at the end of 8 weeks, you're asking for the forgiveness. So 8 weeks times 20 hours a week is 160 hours. Multiply it by $5, your reduction is $800. Now, if you go for the 24-week time period, then it's 480 hours, and you multiply by 5, your reduction is 2,400. Now, the final thing I'll say about this, and then we'll move on, is if we did reduce her and we get a $2,400 reduction, when you're doing the calculation of your loan forgiveness on the form itself, they add everybody's pay together, and then they're going to subtract $2,400 from it, and that'll be your forgiveness. If you raised somebody up by $2,400, gave them a bonus or whatever, you can include that for that other employee, so then basically you just offset the reduction. So anyway, that's the deal with that. And now I'm ready for employee levels. So is there anybody that has a question? And Paige, we haven't heard from you. Barbara came on. So Paige, you want to come on, and is there anything you want to say to the group? Maybe about your personal life, or a question that you feel like needs answering?
No, I'm fine back here. Thank you, though.
Okay, all right. All right, who is our favorite attendee, Paige? Do you have a favorite attendee? I'm giving you a hard time.
I'm biased to my tech support attendees because I know them and we're like family. So yeah, not fair either.
All right, okay. All right, be nice to Paige, Vicky says. All right, so employee levels maintained. So this is the last thing, and this is the thing that's giving people the most angst, because you may not be able to keep all of your employee levels maintained because there's just not as much business out there, you know? So you encourage to keep your workforce at pre-COVID levels, and you measure it by comparing something called an FTE, which is a full-time equivalent. Basically, the number of employees that you have before COVID to the number of employees that you had during the COVID period. So how do they determine what the number of employees is? Basically, I mean, you're like, well, Greg, I mean, an employee is an employee. That counts as one. Well, yes, one full-time employee counts as one FTE. Two 40-hour employees counts as two FTEs. But if you have a 20-hour employee, a part-timer, they count as 0.5, and two 20 hours counts as one. So that's how that works. It's actually a calculation that you do. You take the average weekly hours for a person, divide it by 40, and you round the answer to the nearest decimal, tenth of a point, okay? And so I'll just do this. So Faye full-time, 40 hours a week, divided by 40, 1 FTE, rounded 1 FTE. Sam's part-time, 30 divided by 40, 0.75, you round up, 0.8 FTE. Bill barely works, 12 divided by 40, 0.3 FTE. So the total FTEs in this calculation is 2.1. So it's like a total organization calculation that you do, and that's how you compute it, okay? And you do it from before COVID to during COVID, okay? I'll get there, Sherry. So just before you ask questions about this, please watch, okay? So let's see. Okay, so again, you compare the time before COVID, from before COVID to the forgiveness period. So you're comparing the total FTE during the forgiveness period, which is 8 weeks or 24 weeks, to before COVID. Now you can pick the time period that you're comparing the COVID period to. The before period is called the reference period. It's called the prior reference period. And you want to pick either, you can either pick 2/15 to June 30 of 2019. So you basically pick the same time period last year and see what your FTEs were during the average of that time period, and you compare it to now. Or you can pick the first 2 months of 2020. If you weren't in business in 2019, you'd have to pick the first 2 months of 2020. But you know, you can pick between the two. So if you had hired a bunch of people right at the beginning of 2020 and then you had to get rid of them before COVID started, you would obviously want to compare, for purposes of making sure your FTEs are okay, you'd want to compare the COVID period FTEs to the 2019, the prior year, when you didn't have as many employees. Also, if you had a bunch of employees in 19 and you didn't have them in the first 2 months of 20, then you're going to want to pick the 2020, because that's the one with the, you want to pick whatever you're comparing the COVID period to, you want to have the lowest FTEs as possible, okay? So, let's see, all right. Anyway, if you're a seasonal organization, like a camp or something, you're closed part of the year, there's a third option for you, okay? You have to look in the instructions for it. So anyway, this is how you do the comparison to make sure that you've maintained employee levels, okay? And this first example is showing you what happens if you fire and replace somebody. Sam was there, still there. Sally fired her, replaced her with Jay. Everybody else is the same. FTEs didn't change, you're good, okay? Now, what happens if you reduce somebody or get rid of somebody and don't replace them? Sam went from 1 to 1. Sally was fired, was replaced, but Jenny we dropped to half-time. Davis we got rid of, and Alan, we dropped Alan's hours as well, okay? So it went from 4.3 to 3.0, okay? Now you may be saying to yourself, wait a second, this is unfair. You might be freaking out right now going, well, I can't hire these people back. Either they won't come back, or I don't have anything for them to do. I don't have the money to pay them because of COVID. There's all kinds of reasons why your FTEs may have gone down. And there are all kinds of exceptions that will get you out of having a reduction, okay? And I'm going to point those out in a second. But first, let me just show you what the calculation of the reduction would be, assuming that you can't get out of this reduction, okay? So basically, the FTE was 3.0 during the covered period. In the prior reference period, and in this example I used last year, it was 4.3. So that's the denominator. So you divide 4.3 into 3.0 and you get a 70% number. So that means FTEs are 70% of what they used to be, okay? So let's say you got $100,000 as your PPP loan. You did everything right. You spent 60 on payroll, 40 on rent and utilities. You would have had 100,000 forgiven, but now you take the 100,000, you multiply it by 70%, you get a reduced amount of forgiveness because your FTEs went down. And that's kind of a big deal because the other 30,000 you'll owe back, okay? So let's see. Let's answer a couple questions. We have one of our employees that has pulled away with the National Guard, so we had to hire someone else to take his place, and the new employee is being paid the same wage. Both were and are full-time employees. Yes, Sherry, you're perfectly fine. They're not worried about individuals. They're just worried about the number of people, okay? Sherry, we paid a settlement to a former employee that was granted during the forgiveness period. Can we include this in the forgiveness application? If it was paid as a salary, Sherry, then you can. If the settlement was paid as a salary. What if someone is on maternity leave during the entire COVID period? Are you paying for them? If you're not paying for them, you know, that's an interesting question. I think you're probably okay. Barbara has a question. If full-time is a different, say 37.5 hours, is the reference point based on 37.5 hours? From what I'm reading, Barbara, it's supposed to be a 40-hour employee. But 37.5, as long as they're still working 37.5, the number of FTEs won't go down, so I don't think it'll matter, okay? So Karen, we have an employee who's refused to come back. So this has to do with what you can do to avoid the FTE. So don't ask any questions for a second, guys, and look at the screen here. 3 ways to avoid this FTE reduction. 1, hire people back by the end of the forgiveness period. 2, exclude from the calculation certain employees, okay, that wouldn't come back, they quit, stuff like that. And the third option is they could not operate at pre-COVID levels. This is a generic, sort of general get out of jail free card. You couldn't operate at pre-COVID levels due to some government requirement, and therefore you don't have to do the FTE calculation at all. Okay, so I'm going to go through each one of these. The first one is hiring people back by the end of the forgiveness period. So basically, if you bring staff back up by the end of the period, you could ignore the reduction. Okay, and then I think I have a little calculation here. Oh, again, you compare the FTE at February 15, 2020, that's before COVID. You compare it to the FTE at the end of the period, and if there's no drop, you're cool. Now, of course, again, the application says you have to compare it to the application date, which is way after the forgiveness period, and you had to let people go in the interim, so that might be a problem. Again, I think they'll correct this error, all right? So that's one, and I just kind of did a little calculation showing you. You just have to do the calculation. But this is the exclude employees that lower your FTEs if they asked for a reduction in hours. So say Sam said, you know what, I don't want to work that much anymore. I got to take care of my kids now because they're out of school, so I'm going to ask for a reduction in hours. You shouldn't get penalized for that, okay? If they were fired with cause, not because of COVID, but because they sucked, okay? Or they quit, okay? Now, or you tried to hire them back when you got the PPP money and they wouldn't come back because they're making more money on unemployment, okay? If any of that's true, as long as you've made some sort of effort to find a replacement but couldn't find one, then you'll be fine, and you can exclude them. And this is my question, because if you're on maternity leave, you don't really want to replace them because they're coming back. So I think you can exclude that person, okay? It would only be fair, okay? Karen, we have one employee who refused to come back. Do we have to replace him to get him? You have to make an attempt to replace him, Karen. That's it, okay? All right. So now this is a big get out of jail free card, okay? So this is for businesses that they couldn't operate. Like I have a lot of clients that are theaters and they have shows. They can't, I'm not talking movie theaters, I'm talking like playhouses or dance companies. They can't make the same level of money. They can't pay all those people. They're closed. Right. Alexander says, that's me. So you have to show that you've made a good faith effort to operate, but you couldn't return to the same level of activity because of something the federal government said. Either it was a requirement or it was guidance, like CDC, where you don't actually have to follow it. We won't go into that. But anyway, this can be a direct federal agency putting out something like the CDC, HHS, OSHA, or it can be an indirect agency, which basically means another agency, federal, state, or local, that basically followed suit because of something the federal said, okay? So like if you're in a city where the bars can't open and you're a bar, I mean, these are nonprofits, so I don't know how many nonprofit bars there are. There should be some, but anyway, anyway, then those businesses can certainly get out of having to do the FT calculation, okay? So there you go. Now, I don't know what same level of activity means. Nobody does, but I think it'll be fairly obvious. You know, it's like pornography. You know it when you see it. Anyway, if you can't operate due to restrictions on international travel, does that count? Absolutely, of course. That's a federal agency that told you, so I think that definitely works. All right, here's the documentation that you're going to need. Now, again, if that law gets passed, you ain't going to need any documentation. But I just gave you a list of documents that you need there. I'm not really going to worry about that. I'm just kind of showing it to you. I do want to skip to one more thing because we just have a little bit of time left. This deal that you are hearing about in the news, you heard about it last night. They're not worrying about it today because they're grilling Barr right now in Congress, either pumping them up or shutting them down, so Congress isn't doing anything. But there's this deal between the Senate Republicans and the White House. It should be passing. They'll pass something. And let's see. It looks like these are the things that are probably going to be in it. The unemployment federal add-on used to be $600. It's going to be $200 unless the Democrats get a little bit more. Looks like there's probably going to be another round of stimulus checks, although your AGI has to be less than $40,000 to get one. There's going to be $70 billion for the schools. It's a little late in the game to be giving them money to get ready, don't you think? It's ridiculous. Anyway, and then there'll be COVID liability protection, so you can't get sued if you, say, have a rally and people get COVID. But anyway, now the big thing I wanted to point out is you may have heard there's going to be another round of PPP in this deal. And this another round, it's different from the previous rounds. It's not like they're just giving extra money. They're basically saying that existing businesses, existing nonprofits that already got a PPP can get another PPP, okay? Now, the only way they can get another PPP, though, don't get too excited, is if the revenues have gone down 50% because of COVID. So your arts organizations might be able to get a second round of PPP funding, okay? So anyway, and you have to have less than 100 employees, and you have to show that you need the money for payroll, okay? So I want to end by going to my little website here, and I'm going to stay on and answer some questions too, but I just wanted to do my little dealio here. Oh, there it is. There we go. Okay, cool. So If you have not signed up for the webinar that's coming up in August, I really want you to think about it. If you are either new to QuickBooks or you've been using QuickBooks for a while and you're having trouble figuring out how to get the reports out of the software that you want, we're going to give you an hour and a half. All we're going to talk about is customizing and memorizing your reports, okay? And on the first day, that's the second day. The first day, we're going to go over all of these little features or preferences that you have in the program. It's amazing to me how people don't know about these features or preferences. I'm going to click on them. There's over 100 of them, and they do all sorts of cool things. And we're going to go through a ton of these. Some of these are little, some of these are big. I mean, it's all the way from like, what does enter do? When you press the enter button, pressing enter moves between fields. That means when you press enter, it goes to the next field instead of saves the transaction. Little stuff like that, all the way to big stuff, like turning on features like class features and stuff like that, or using account numbers. And there is a ton more in here. It's really very cool. We're going to do this webinar twice. We're going to do it. Let me see, we'll go to where the webinars are. We're going to do it it's called a 2-day series, and we're going to do it twice. We're going to do it on August 11th and 12th, just for people using the desktop program of QuickBooks. And then we're going to do the whole thing over again just for people that are using the online edition of QuickBooks the following week, the 18th and the 19th. So it's $149 to come to this thing. You do get continuing education. However, we're going to give you $30 off with a coupon. And let me just show you the coupon code here. Here's the code right here. It's called PPP Web 30. And I'm telling you this now because you have until Saturday night to sign up for this thing if you want to get this $30 off, okay? Now, if you would prefer to have on-demand training where you can learn everything you want to know about QuickBooks, if you are a nonprofit, go to on-demand and you can sign up for our on-demand training. It's exactly like you're seeing here, except it's on demand when you want it. It's 16 hours of learning if you get the bundle. This is basically 2 courses, the essentials and non-essentials, and it becomes the Bible for nonprofits that are using QuickBooks. We have it in the desktop and we have it in the online edition. I'll go ahead and click View Course. And it's normally $400. We're giving you, I think, $100 off of this until Saturday. These are all of the topics that are covered. Okay, tracking special fundraising events, volunteers, customizing forms, special stuff for houses of worship, in-kind contributions, getting a thank you letter out of QuickBooks. This is more the basic stuff, but a lot of you are going to need it. Okay, entering your vendors, entering your classes, outstanding pledges, tracking them, tracking donations, all kinds of stuff in here. Auto allocating expenses to programs. That's a neat trick. But anyway, it's 16 hours. We're going to give you $100 off, and let me show you where that code is. Here it is right here. It's PPP298. So for either the webinar or for this on-demand training, you just go to QuickBooksMadeEasy.com, and when you're in checkout, you do PPP298 if you want the on-demand training, and it'll give you $100 off. And you do the PPP 30 and it'll give you $30 off. Now, finally, a lot of you have tech support already. And if you've been watching, if you know that Paige and Barb are good, I'm hopefully good. There's a couple more people too that answer questions. And if you sign up for the tech support, and I'll just show you where you go to do that, tech support. And I'll just go ahead and click it here. When you sign up, pick that you want it for a year. And the reason why I'm telling you this is because the year normally costs $4.99. We are going to give you the whole thing, a year of tech support, for only $2.99. Okay, so that is $200 cheaper. And for a whole year, you can call in, you can email questions, you can set up appointments, we can dial into your computer through remote access and answer any questions you have about QuickBooks, okay? And this is the code for it, PPPTS July. So we'll have these codes, but you gotta act before Saturday because the discounts are low, so we don't like to keep them up very long, okay? So I think that's it. Let's see. Yeah, Sherry says she thinks she would benefit much from the classes on the 11th and 12th. I'm very excited about the webinar because I don't think there's ever been a class on customizing reports and preferences. And they have them in the online edition as well. All right. So is there anybody else that has some big time question that needs answering? I don't think so. I don't think so. So how did we do, Jeremy? The timing looked okay.
Yeah, the timing was great. You did very well, Greg, I must say.
Right.
Even though it was your first webinar you've ever done, you did a really good job with it.
Yeah, it's my first webinar, and I missed my medications this morning, so I'm really kind of amazing. So I'm going to actually play a little bit of music, but I got to wait for you to finish talking, and then I'll start.
That'd be wonderful.
Okay.
Again, it was a great webinar, Greg, and thank you to all of you who attended. In these last few moments, if you could do us a favor and chat us just one thing you might put into practice moving forward, maybe something you learned, just a few words is all we need. It'll really help us understand what a helpful takeaway from today's webinar was. So what's one thing that you might want to put into practice or that you learned about PPP that you'll do moving forward? For me, I learned that I should look into nonprofit bars. I think that might be the new direction that I go in.
Don't you think we need it?
Well, someone mentioned Elks Clubs in the chat, and I'm like, okay, that's true, but let's go one step further. Let's make it an actual nonprofit bar. So that's good to think about. Quick reminder, follow-up email will include a PDF version of today's PowerPoint and a recording of today's webinar. These should arrive through your webinar registration email by the end of the week. If you have any further questions or comments, please feel free to email GrantStation directly at info@grantstation.com and reference today's webinar, PPP loans, the latest on forgiveness and QuickBooks tracking. And with that said,
let's say goodbye, Jeremy.
Okay. Thanks again, everybody. Have a great day. Bye-bye.
Bye-bye.
Visit GrantStation to see our latest online education offerings in the form of live webinars, interactive workshops, and on-demand learning. GrantStation.com, your fast track to funding and online education.